What's up, guys? It's your Money Cat. Hope you guys are having a good weekend so far. NIO is set to announce their earnings on March 1st. And with the time left between now and March 1st, I think there is a good opportunity to get into NIO for some possible gains. So we are going to talk about that. But before we do, please remember to like the video, subscribe to the channel, and hit the bell so you are notified when there is a new video uploaded. So this is 180 days for our time frame chart for NIO. Since the beginning of this year, 2021, NIO has been pretty much range bound and consolidating within the range of $53 or so, and on the top side about $65. NIO did hit all-time high at 67, but that was only one time, and 65 seems more reasonable resistance as it was rejected once, twice, and 3 times so far within this range. On the bottom side, the $53 level, it was acting as a resistance before NIO broke through, and since then it held the support here, if you want to count that one as well. And most recently, it does seem like it held, at least so far, around $53. If you look at the RSI and the MACD, it's clear that we have been in a little bit of slump, a little bit of downward trend. RSI went from overbought all the way to the oversold region. If you look at the MACD, we went from the positive territory, crossed zero mark, and all the way down into negative territory. This wasn't specific NIO related issue. This happened with, I'd say, just about all EV companies, including Li Auto, XPeng, even Tesla. So I think this is more overall market pullback rather than specific issue with NIO. Which means that this could be a great buying opportunity for NIO, especially heading into the earnings day on March 1st. If you look at the RSI, right now it's sitting at 41, but as early as last week, it was in the oversold region. So it's definitely picking back up into a more positive territory. If you look at the MACD, same thing. It basically went down, and it looks like it's about to cross over on the MACD, which usually means that a trend reversal is just around the corner. So we can potentially see a true MACD crossover and the momentum heading into positive territory. Along with this, like I mentioned, NIO has been range bound for about close to 2 months now between 53 and 65, meaning both those levels are pretty strong in terms of support and resistance. So it looks like last week NIO was able to hold that support line around $53, which coincides with the RSI picking back up from oversold region, as well as on the MACD, the red bars starting to get smaller and smaller, leading to a potential MACD crossover. So this has all the signs of a trend reversal. Now that doesn't mean that 100% it will have a trend reversal, but all the signs are there, so chance of it happening probably more likely. Not only that, we are near the bottom of the range, and so if we expect this horizontal channeling to continue, then it'll bounce back up and head up to the resistance, likely all the way to 65, and maybe even hit all-time high. The only thing that's different from before is NIO's price is right now below this green line, 180 days moving average, and typically you want the price to be above it, as that signifies that you are still in a bullish run. However, we're trading NIO based on the fact that it has been consolidating horizontally within this range. The fact that we're currently below this 180-day moving average, it doesn't matter as much. We're not banking on the fact that it'll continue to go up in a bullish run. We're just banking on the fact that it has been basically bouncing back and forth between the support at 53 and resistance at 65, and we are predicting that it will continue on. But wait, that's not all. I actually like this as a long-term buy or short-term trade leading up to earnings, and even possibly holding through earnings. I generally don't hold my short-term trades through earnings because it's just too hard to predict earnings. You have to not only predict what the company did, but their guidance and how the investors are going to take that news. So generally I stay away from predicting earnings, but this much we know: the delivery numbers are going to be off the charts for NIO. This is the monthly delivery numbers that in 2020 from January to December. If we just look at the curve, we are growing. NIO is growing pretty much exponentially, and NIO has been setting new record delivery numbers month after month after month. December was the highest number at 7,007 deliveries. And if we also look at the January data, it was another record at 7,225 vehicles delivered. Any way you cut this delivery data, it's going to be just phenomenal and new record. For example, in January, year-over-year increase was 352.1%. Now, if you reflect that over 3 months, you're pretty much going to same thing, because every month this is what NIO did, especially comparing what they did last year. So obviously, delivery numbers isn't the end-all be-all data for electric vehicle earnings reports, but it is a big part of it, especially for a relatively new or growing company like NIO. So without trying to predict, what the actual earnings will be or how the investors will take it, this much we know: the delivery numbers will be fantastic. So we at least know one thing that's more positive for a possible earnings report, and that's why I think this is a great buy. I think NIO will rise up leading into the earnings report, and at that point, depending on how you feel about earnings day for NIO, you can either exit the position or perhaps hold through the earnings, and maybe you get even better news on March 1st and stock goes up even farther. Looking at risk versus reward, I think for the upside, it's reasonable to think that NIO will reach up to or close to 65, which should be about 18% increase from current price. NIO has done this 2 times before since hitting the all-time high. So if we don't count the all-time high, it did it here, got rejected, and then it reached it with the whisker there, and it also got rejected. But it's reasonable because that has been the pattern for the last 2 months. Since hitting all-time high, it fell down and then it bounced back up, reaching the resistance at 65. Then it fell down again, got supported at 53, and a little bit of consolidation, bounced off of the 53 again, but this time was able to reach 65. And now again, it has fallen all the way down to 53 support level. So if pattern holds, yeah, it's going to bounce back up and reach close to these levels like it did before. On the downside, looks like 53 level is a really strong support for NIO. So if we do break to the downside for real, not like this little whisker, but if we go down for real, then that would be the exit. So a little bit of risk here, but a lot more potential reward. And that's the way I like it.